Hey, hope everyone is well in light of the recent craziness in the markets. I spoke to some of you recently on the phone, and others watched the quarterly video we sent out earlier this month. I'm sending this video today to touch base and to explain, what we think is happening and the different scenarios we see in the coming months, and what we plan to do about it. I'd like to hope that the adage that my dad always used rings true here: it's always darkest before dawn. Well, for one, I am frustrated, to be frank, and here's why. We foresaw a decline, and we actually told you about it. We have orders lined up and ready to sell to raise cash, but this market has fallen so fast that unless we sold on new short-term lows each few days, we couldn't have sold. If you look at any chart over time, you'll see that every time the markets have big declines in the last 13 years, it races right back. Corona was the exception, but we knew why that was happening. It made its way all the way back to even and higher still from that. Now, consider that the NASDAQ has fallen 17% in 15 trading days. Every day we looked and said, well, we'll wait for the relief rally, and in rare fashion, it never came. As we've said, once the Federal Reserve starts raising rates, we're going to see some selling pressure. The issue, as most of you know, it's virtually impossible to predict when the market would react to the potential of raising rates. Remember, the Fed has not raised rates one time yet. Moreover, the Federal Reserve has been predicting for years they would raise rates in 2022, and the market continued to hit new highs. And it's my opinion, the Federal Reserve, on another note, has too much power. And I mentioned this book before, but if you like to read and you haven't read this book or heard of it, I'm telling you, it's a great historical account of the creation of the Federal Reserve called The Creature from Jekyll Island by Ed Griffin. As I was saying, the Fed was signaling they were going to raise rates in 2022 for years. And they told us it would likely not be until March of this year that they would start raising at all. So why the quick and swift 17% decline in 15 days? As you probably know, the market was just at all-time highs just 3 weeks ago at the turn of the year. It was at that time we started to create models that would decrease our exposure to the market. Our idea was to raise cash and see how it played out, and perhaps use some of that cash to buy some defensive names. Can't really be in the bank, can't be in bonds. There's really no other place to be than trying to find places to be in the market. But as I said above, when the market falls this fast, attempting to sell while this is happening is akin to trying to catch a falling knife. Generally, the prudent thing to do is wait till it stops falling, allow the market to bounce, and sell at that time. While we were doing this, we saw the market, again, stop temporarily at each of these support levels, thinking they were going to bounce, as they always do, but blew through each one of them, making it feel very uncomfortable to sell at each recent low. So here's where we are today. This coming Wednesday, the Federal Reserve meets, and it's anyone's guess what they say. Some believe that there's no way the Fed can continue this mantra, this hawkish tone of raising rates, and they should say they're going to put things on pause or slow it down until things settle down. If this is in fact what they say, the market should rally and hold that rally. And if that happens, we'll need to decide at that time what a good point to raise cash and decrease our positions and how much. If the Federal Reserve reaffirms that they will continue to raise rates as expected, no one is really sure how the market will react. The last scenario, which I can't imagine is likely, is that the Federal Reserve says, unless the Federal Reserve wants to crash the market entirely, they're not going to say we're going to add more rate hikes and we're going to do it more quickly. Well, no one knows where the bottom is, and no one knows what the Federal Reserve will say on Wednesday or do this year. Again, it's like trying to know when a puppet master is going to pull the string. It's tough to know when you're trying to guess, again, what an outside body of people the Federal Reserve is going to do when it's really largely their policies that are creating this. And of course, there are some issues with inflation and Ukraine and some things in the White House, which even CNN now is saying are very, very unstable. So I'll leave you with this. We've been here before, and most of us are long-term holders and don't need the money tomorrow. Thus, we hold and wait it out. Our goal, like I said, is to still raise cash and lower some market exposure. But looking at this as a long-term view, panicking and selling now never seems to be the right idea. I personally hold all the names you hold, and I haven't sold anything. If something changes, I'll be back to let you know. Thank you for listening, and please let me know if you have any questions or anything else you need to talk about anything else. Thank you.